You know what? We're going to talk more about that right now, Adam, with Jeff Papp. He joins us from Oberweis Asset Management in Chicago. He manages the company's China Opportunities Fund. So, Jeff, talk to us first about how you read this interest rate increase and if it's going to be the last. Does it matter? Is it priced in? What's the deal?
Yeah, I think this interest rate increase was largely expected by the market, and it comes only a few days before the June China CPI data comes out. The June CPI is probably going to be over 6%, which is a pretty big number, but we're hoping that this is going to be the end of the peak, or the peak in inflation in China. And while we may have 1 or 2 more months of high absolute levels, we're going to start to see these levels drop off, mainly as it relates to in the second half of last year, Chinese CPI really started to pick up. So in the second half of this year, we're going to see much more difficult comparables as we look at it on a year-on-year basis.
So what does that mean for what you do? I mean, you manage over $1 billion in assets. You're focused on this Chinese economy. Do you slow down your investment there, or are you still all in?
No, we're still all in, and we think as we start to see signs of peak inflation, as we start to see signs that growth is slowing, and with slowing growth, inflation should also come down hand in hand, that we see very attractive valuations as this has been priced in, and we're starting to see people price in that the Chinese economy is going to crash land as a result of extremely aggressive policies that the Chinese government has put in place to normalize policies that they put in place to combat the credit crisis in late 2008. So we're very encouraged to see what happens when the Chinese government moves to a more neutral stance on the policy front. We start to see peak inflation, yet some of the underlying data, especially on the consumer side, continues to remain very robust.
So, Jeff, if you're all in, what does that mean? Where specifically are you looking to have exposure to China? Are you playing those U.S. multinationals or what?
Now, we're playing small-cap Chinese companies that cater right to the domestic Chinese consumer that's booming right now. I think one thing that gets overlooked in all the inflation talk in China right now is that wages in China are increasing much faster than inflation. We're seeing minimum wages in China go up 20% per year. So while inflation is high at 5 to 6%, wages are increasing at a much faster rate that allows the Chinese consumer to continue to consume more and more goods. And this is in stark contrast to any place globally that you can find, especially in places like the U.S. where there's high inflation as it relates to oil and food, which we tend to exclude as we look at core inflation, yet wages in the U.S. don't seem to be rising at all. So you have two different dynamics going on, and so we want to own companies in China that are catering to those Chinese consumers that continue to have more and more money.
And I know our viewers like to hear your macro view, Jeff, but be more specific. What companies are you guys buying right now?
Well, you talked about in the segment before, we're seeing Chinese casino companies do extremely well, where they continue to set monthly records, it seems, almost every single month in terms of gambling growth. Luxury spend in China continues to be very, very strong. So casino companies like Galaxy, they just opened a new casino in the Cotai Strip of Macau called Galaxy Macau. That's listed in Hong Kong, 27 HK. Continues to do very well. Another name I'll throw out there that's U.S. listed is Sina. They have a social networking platform that's really ramping and taking off. It's kind of a Twitter, Facebook type hybrid platform that they should be able to monetize extremely well going forward. This type of product and these companies are going to do well despite what goes on in terms of tightening on the policy front in China.
All right, hey, Jeff, thanks so much for joining us. Really appreciate it. Jeff Papp there manages over $1 billion in assets from Oberweis Asset Management. We're going to